Hello and welcome. Thank you for joining today's webinar. Today, we're going to discuss everything you need to know about US sales tax. If your business is already selling in the US or if you're planning to sell in the US, it's essential to understand various things like Nexus and how to register for sales tax, how to calculate the right tax rates, how to collect it, and how to remit it and pay the various state and local tax authorities as well. My name's Sasha Wilson. I'm the Senior Director of International Sales at Avalara. We are a tax automation compliance provider. We help businesses that are selling internationally to understand what their tax obligations are, and then use the right set of solutions to automate that process of tax compliance moving forwards. I'm going to be joined today by my colleague Krishna, who's going to join the discussion to talk about how businesses are solving these US sales tax challenges in order to be successful in the region. So Krishna, why don't you tell us a little bit about yourself?
Thank you, Sasha. And hi, everyone. So I'm the Director of Sales for Avalara India. And I've been with Avalara for about 3+ years. And I've spent more than a decade of my experience in tax technology solutions.
Fantastic. I think we've got the right person to help with this webinar then. So we're going to talk about US sales tax and Nexus. And I think we're going to go into that in a bit more detail. But before we do that, let's just have a think about the market itself. Why trade into the US? Have you got some insight that you can share about why customers would enter into the US market?
Absolutely. So first, let's consider some recent statistics from Avalara's tax changes reports published in early 2023. So in 2022, during the US peak sales season, the market have experienced a substantial growth by upticking about 5.3% to a total staggering value of $936.3 billion US dollars. It's a massive market waiting to be tapped into, isn't it? We also know that US holds the top spot globally when it comes to the software revenue. With its thriving technology sector, it offers unparalleled opportunities for software companies and tech-related businesses. So coming back to the pointers, UK exports about 177 billion pounds to the US, which happens to be its largest export market. Same is the case with India. India exports about 110 billion US dollars into the US by means of goods and services. It's a great market to tap into, Sasha.
Yeah, you've just hit on some really impressive numbers there, and that's probably just the tip of the iceberg, right? The US market is known for its vast consumer base. You've got all these diverse industries, and it's very much an innovation-driven economy, isn't it?
Absolutely, Sasha. It's 100% true, but it sounds so exciting that there is a lot of market which is untapped, and businesses can really tap into that. But equally, there are certain challenges and complexities, particularly in dealing with the US sales tax and understanding the nexus. And I think that's why we are here today, to share insight, to support businesses on how to plan their journey, how to navigate their challenges effectively while they trade into the US.
Yeah, I mean, it's clear the US market is a fantastic opportunity for any businesses that are in EMEA or APAC or anywhere outside the US who want to benefit from that. Obviously, there's logistics, there's product pieces to try and get a head around, but really to be successful, the crucial one that we've made a business around is really around US sales tax. So yeah, let's talk about that.
Yeah. So sales tax as such is a behemoth when it comes to the discussions in various forums. So Sasha, could you explain what US sales tax is and how different it is from VAT?
Yeah, absolutely. One of the key differences around sales tax is it's levied on the very end sale of a product. So many individuals or businesses around the world might be used to VAT, value-added tax. That is a tax that's levied at every stage of production, from manufacturer through to distribution, through to retail, through to the end customer. At every level there's VAT that is charged. And with sales tax is very different. There's no sales tax at any points of those production or distribution or retail. It's really at the very end customer. that pays that sales tax. That's probably the key difference. And the other piece is really around Nexus. And we could probably have a whole webinar on Nexus, but Nexus is really an obligation to pay sales tax based on various rules. It can be around physical presence. It can be around a level of business that's done into a certain state. It could be various websites that are used to direct traffic into various states. There's a lot to cover there, but Nexus is a big thing, which is probably unique to sales tax as well. And then the other piece is really, it's probably not a very well-known fact that the US, when you break it down, there are over 14,000 jurisdictions. So think about Europe, think about each country. Each country is a jurisdiction. In the US, you've got state level jurisdictions, county level, city level, even local municipal jurisdictions. So there's about 14,000 altogether, and each one of those can have its own rates for various products and services. It can have its own rules around what is taxable and what is not taxable. There are things like sales tax holidays in the US, which again is unique, which we don't have in the VAT or VAT world or GST world. So when there's back to school, some states or some jurisdictions might apply a lower rate of tax or sales tax on school supplies, for example. Or if there's a hurricane season coming, there might be lower rates or reduced rates of sales tax on DIY or home supplies potentially as well. And then there's exemptions. There are various customers in the US that might be exempt from sales tax. Think of government institutions, educational establishments, schools, universities, hospitals even as well. All these, if you're selling to those as customers, they would provide an exemption certificate. So you don't charge sales tax in those supplies, and you need a way of then storing and managing those pieces of paper essentially as well. And then, probably the last piece I would cover on is marketplaces. A lot of businesses that start selling in the US, certainly retailers will dip their toe in the water with marketplaces. Now, there's been recent legislation, which means marketplaces do manage a lot of that sales tax compliance on behalf of sellers, but actually there are still obligations for sellers. There are still requirements to register for sales tax, still requirements to remit payments for sales tax on channels outside of those marketplaces as well. So a lot to think of there, a lot of differences. But Nexus, let's just take it back to Nexus. I touched on that earlier. It's a huge topic. Krishna, why don't you tell us a little bit more about Nexus in particular and what happened in 2018?
Thanks, Asha. And I think you've just uncovered the complexity when it comes to sales and use tax in the US. So it all started after a remarkable judgment by SCOTUS, the Supreme Court of the United States, in 2018 between South Dakota and Wayfair Inc. And that remarkable judgment created the concept of Nexus. Nexus, as such, is an agreement between the states. And there are multiple types of nexuses which you have already touched upon. One is physical nexus, which we already know. Like, you have a physical establishment, you have an office, you have an employees working in a state, then you're triggering physical nexus. And that would warrant you to get yourself registration in states for your sales tax registration. But the most important concept which emerged after 2018 is economic nexus. So every state have decided a specific threshold for the business activity performed as a remote seller into the states. So often, its majority of the states are in the range of $150,000 to $200,000. And some states have also considered the volume of transaction, not mere value. So that's how the combination works. Like, you have $100,000 or 200 transactions. And if you breach either or, then you're triggering Nexus. Some states like New York, Texas, they are very clear and they have only value thresholds, which are about like $500,000. And there are states which will also warrant you to get a sales tax registration, even if your supplies are non-taxable, but they are even counted as a part of your threshold. One classical example is the state of Utah, which will demand you to $100,000 in value or 200 transactions, whichever is earlier. And this $100,000 threshold includes your non-taxable supplies equally. Hold on, we just talked about physical nexus and economic nexus, then where is complexity? The complexity is yet to come. So if you are an e-commerce supplier or an e-commerce seller, and you are selling on marketplaces, like Sasha touched upon a bit ago. So even states consider your presence on marketplaces, and you might trigger an obligation to get yourself registered in that particular state. And if you are having affiliates or you have remote workers working in a different state, even if you're not operating, but you still have workers working for you, you're triggering Nexus. And if you are maintaining a website through which you are trying to generate a lead by clicking through it, you are again triggering a click-through Nexus. And even attending a conference or performing a sales activity in a state with or without any outcomes can even trigger your sales tax registration. Texas, as such, will demand you to get a sales tax registration even if you attend one event in a calendar year. And we talked about remote sellers. So there might be a question in your minds when you say, so is this only for people selling in the US from US? So does that mean a remote seller between the states, between New York and New Jersey? No. Remote seller doesn't mean only selling from US into the US. Even if you are selling from any other country into the US, you are equally termed as a remote seller. And that brings in a lot of complexity when it comes to the Nexus, remote sellers, and your economic thresholds and your pointers where you're triggering sales tax obligations in each of the state. Definitely, Nexus is complex and it is impossible for businesses to manage manually or even through any Excel kind of scenarios. It cannot be ignored because it can come back very strong to the businesses operating in the US. And needless to say, it is crucial to be compliant in order to be successful in a large market like the US. So Sasha, can you please tell us why businesses need to take the US sales tax seriously?
Yeah, absolutely, Krishna. From everything you just said and that I hinted at earlier as well, sales tax compliance is complex, but it's really a part of doing business in the US. If you're serious about doing business in the US, you have to be serious about handling sales tax correctly. Think about all those 14,000 jurisdictions, the different tax rates, the different types of nexus, the different forms you have to file for different states, some on paper, some online. If you get those wrong, it can be costly. And don't forget, the states themselves, like most governments around the world, they have huge budget deficits that they're trying to fill, especially after COVID. They're hiring more and more state tax auditors to try and recoup some of those lost revenues. And businesses are easy targets at the end of the day for audits. Audits can be costly. If a business is found to be uncompliant and there's an audit of their affairs, the average cost is around $80,000. If not more in some cases. And the states can go back a number of years. They can not only go back 10+ years, they can add interest to that. There can be penalties. Plus, there's the reputational impact to take into account as well. So, in order to be successful in the US, it's really a case about being compliant from the start. And that's really the best way to handle it. Handling compliance after the fact is always going to be more expensive. Handling compliance from the start as you're venturing into the US and trying to automate those processes as you go along is always going to be the best option. We've seen incidents and examples of businesses that have been trading in the US for several years, not been managing their sales tax effectively, and then they're in a situation where they're looking at merging or acquisitions or even going to IPOs. And there's various levels of due diligence that happens in those situations, which will, essentially highlight any tax exposure and potentially affect a valuation of a business as well. So yeah, it's really something to take into account as you're really embarking on that journey of selling in the US. So Krishna, what can businesses be doing? Is there any tips that you can give from your extensive experience about how businesses can be compliant in the US?
Absolutely. So, Sasha, there are multiple steps which you need to really take when you're doing business into the US, but we at Avalara, we have concised and created a 6-point checklist, which we highly recommend for companies who are planning to do business into the US or equally who are already doing business into the US. So the first thing is understand where you have sales and use tax obligations. Please look into your business activities and even also understand what kind of transactions, volume, value you are trying to do in each of these states where you're operating in. Second, needless to say, register to collect the tax and levy the right amount of the tax and even remit the tax. And track and manage your exemption documents. So exemption certificates, if you're really doing business with resellers or you're trying to do business with the federal governments or even the state governments or even any charitable organizations, understand the exemption certificates which they are supposed to give you as a part of your compliance activity and track and manage all of them in one place. And self-audit your purchases because it is equally important to track the kind of a tax you are paying for your purchases because like Sasha mentioned about earlier, so it is way different than global taxes like VAT and GST, where you really have a credit which you can accumulate based on the purchase you do for your businesses. Because in sales and use tax, there is no concept of credit at all. And the legal onus is on the purchaser when it comes to track and to remit the right amount of the tax equally. And finally, file and remit the tax in the right time and with the right and the accurate tax determination. So needless to say, if you have to consolidate and put it in a very concise manner for all of these things, you got to observe your business of what is happening in the US. If not, you will be observed by the state governments or even the authorities. So Sasha, so I've spoken about what we need to know before selling into the US and also how come the landscape of the sales tax is complicated and complex. What are the potential landmines we are talking into about? But I just want you to throw some light or probably advise the companies who have already started selling into this market. They've already started doing business. They aren't aware about these complexities when they are foraying into this market. So how do these kind of companies handle and start becoming compliant again?
Absolutely, Krishna. There are various tools and solutions around. Here at Avalara, we've got a range of sales tax risk assessments which are available. There's an online version available for e-commerce sellers and a more in-depth version for more complex business requirements as well. What these essentially are is a series of surveys that really help us understand, a bit of insight into a business model and, where they are trading, the states that they're selling to, where the customers are, all this. Essentially, what it does is it produces a PDF report which helps the business understand where they have Nexus and where there are recommendations to potentially register for sales tax. So that's always a really good, useful starting point. The follow-on from that is what we call a tax exposure analysis. So what we can do is, if a customer's been trading in the US for some time, unaware of their obligations, firstly understand where they have Nexus obligations. Secondly, we can then take some sales information across those states, plug that into our software, and that will determine what potential tax is due or owed in those states, along with some remedies. In some states, it might be advisable to just register for sales tax immediately. In others, if there's been some sales tax accrued over several years, it might be advisable to go down a voluntary disclosure route or a VDA route. So if a voluntary disclosure analysis or agreement is essentially a process whereby we would represent a business, approach the state. If a state approaches a business, they can go back, like as I mentioned before, 10 plus years, and try and recoup all that sales tax that's owed. If a company opts for a voluntary disclosure, that limits that look back to 3 years. And it also limits the amount of penalties and interest that might be due on that as well. So those are probably two or three options there that I would absolutely suggest businesses look at to rectify a historical situation. But then moving forwards, there are obviously solutions available, of which we have some as well, to help automate that process moving forward, so it doesn't become an issue again in any of the states. So touching on that, on the automated piece, Krishna, why don't you tell us a bit more about how Avalara can help to support that?
Sure. So Avalara is a global leader when it comes to the tax automation. And at Avalara, we have a global arched vision to empower global commerce and to empower sellers to do compliance business into the US. So how do we do it? We have a flagship product called as AvaTax that can help you determine the accurate tax rate depending upon your city, your county, and even your lane at an accurate zip code level. And how are we able to do that? Because we have a content which is up to date when it comes to any kind of the recent changes happening across various states in the US. So like you mentioned, Sasha, we have around 14,000 jurisdictions, and there are about close to 50,000 plus product taxability rules floating all around with sales tax holidays and everything. So Avalara keeps up to date the tax rates at the very, very premium level, wherein you get accurate tax determination at every moment you access the solution. And so do you really need any specific changes in your systems to really do this accurate tax determination? Absolutely no. We have APIs that can seamlessly integrate with any of your source systems. Could be like an ERP or even a commerce solution or even a payment gateway, and etc. And don't worry, we still have around 1,400 plus connectors that can integrate with all systems a company might have to ensure tax are calculated, filed, and paid in the background, so that you as a seller, the sellers can really focus on revenue generation activities. It's a flexible and easily customizable and so easy to use so that anyone can pick it up and run, and you can really manage complex scenarios with ease. So we can support any kind of complex scenarios. You have multiple systems in play. Yes, Avalara can be a potential answer to that one. And the most important point, which I touched upon when it comes to the point of the checklist, which we're talking about, exemption certificates, which is a crucial aspect in your sales tax compliance journey when you're dealing with multiple parties, multiple vendors, and exempted customers. So Avalara has a solution that can seamlessly integrate, and it can give you a holistic picture of your exemption certificates. And so that you can also find the validity, you can also tag the relevant transactions, and your transactions are automatically exempted by use of these solutions. So it's a solution that can make your entire tax compliance journey less taxing and more relaxing. So with that, I think we touched upon an important topic when it comes to the point of the Nexus. What is the importance of Nexus in sales tax journey, and etc. So thank you for today's webinar. We touched upon an important topic of Nexus. So know your Nexus, which is the behemoth of the sales tax compliance. And I'm sure you derived a lot of value out of this discussion. But before we wrap up, so Sasha, do you have any final comments?
Yeah, thanks, Krishna. Yeah, there are two big takeaways that I would like to leave everyone with. The first is, if you're unsure about selling in the US and your sales tax obligations, I would highly recommend a sales tax risk assessment. It's a very cost-effective way of figuring out where you have Nexus and then potentially how to address that. You might have some business decisions that you want to make based on where you have Nexus. You might make some decisions on where you want to sell, the customers you want to sell to, but essentially it's a way of making sure that you're not operating at risk. That's the first one. The second part is, if you are already selling in the US potentially and maybe managing sales tax manually, or you're actually thinking about selling in the US and we're thinking about just registering and doing it yourselves, it's something I would urge you to think against. Think about an automated solution from the outset. it gets more and more complex the more you sell into the US. Just think about all those jurisdictions, all the different forms you need to fill. They're prone to errors, and it's really a distraction from your core business. So really, yeah, look at automated solutions wherever possible. Start out as you mean to go on, and then concentrate on your core business. Those have been my two pieces of feedback. I hope everyone's found this webinar useful. Krishna, huge thank you for joining me and for sharing your insight into this as well. If anyone has additional questions about selling in the US or sales tax in particular, then please don't hesitate to get in touch. Thank you.
Thank you, Sasha. It was very insightful.